In today's video, we're going to talk about institutional candle. Why? Because we have one going on right now. We like to trade live, to see it live, how it performs and how it works. The institutional candle should happen after the 3 lower lows, 3 higher highs to find the best setups. It can happen after 2 waves or 2 higher highs, 2 low lows as well. But 3 or more should be your minimum criteria if you're only trading IC candles, for example. I know traders that do only this on all assets and doing perfectly good with it, right? So what we're looking for is we have one level, we have 2 levels, and we have the third one. And the third one, we don't know how deep it will go, and we don't need to confirm the third one. We just understand we have passed 2 lower lows like this. What happens with the IC candle is it will create the largest candle as the last candle. See, it did one here, which could have been one, but if it can close a body lower, then it's invalidated. It's no longer an institutional candle. This one was created. Market was buying up and take it out like this, right? So we're going to do like this, add this one. Called IC break. That's step number 2. Step number 1 was identifying this one. Step number 2, let it break. As soon as it has broken it, closed above here, we set up a buy order, right? A buy limit order, a better price buy order here. And then we wait, or the market wait, or your trading station wait. You don't have to wait because you have it set up already. And normally what they do, it goes for this open price of this candle and down to about 50% maximum. It may go lower, so therefore we put our stop around 1-2 points below the bodies, either open, close, depending on which direction. In this case, it's a close candle here, like 1-2 points lower like this. And when we have triggered, when we are into the market, we wait for the market to break this with a candle. When it has done that, now you can set your stop loss to break even, to 0 loss. And what this is taking time because this is 4-hour chart. As the market move, as you may be paying swaps, commission, and stuff like that, every day and so on, you move your break even a little bit, so you cover potential swaps and commissions. So you don't lose anything. It should be 0 trade. Shouldn't be any risk there, right? Now what happens is market will do all this stuff up and down and all the crazy things that markets do. And what we are aiming for is the beginning of this trend here, this downtrend. So this would be up here would be our potential target for this one. You see there is a massive time and massive points gaining here. I think it was 260 points or something like that. That's enough for pretty much a couple of months profit if you're trading one lot for sure, or maybe a year depending on what you're looking for. By waiting out these and only trade them, you don't really need to put a lot of time and effort into trading, really. Because these are well structured, set up by the big money or by traders knowing about them and know what they should be looking for when they do it right. If you try to enter before it's confirmed here, you will lose it many times. Don't do that. Let it break, let it come back, let it do its things. Then you do it right, and as long as it follows your rules, you do it. If it doesn't follow your rules, you don't do it. Right? So, can you see any of these institutional candles on the chart? Of course you can where we are right now, because there is one. But there is one more that was very interesting. That was very good. Let's see if we, again, take this one and show it. There it sits. What happens? You go 1 level, 2 level, and 3 levels. Here comes the largest candle, the largest body in this move here. See that? And why would you try to enter here? You don't have to. Let it move away. Let it come back. Enter. Stop is here or 1-2 points below here. Let it break this one. Set it to break even. Move for commission and swaps as you need. You see how this one is a zone. They rarely go down and hit it simply because that's how the institutional candle work, right? It may go down, just leave it, and you are again aiming for the same target up here as you did on this one, on that one. So 1, 2, 3 institutional candle, 1, 2, 3 institutional candle, right? So that can be a passive order that you have in the market when they happen, and then you of course can do all the other things that you want to do on the chart, but that can be your cash cow, so to say. And now let us take a look at the last one, which is the most obvious one. That's why I do this video, because it's live. It's here. Showing you this live so you have a chance to actually join in on it if you want to. This is not a signal service and so on. It's an educational video, but then if you can read it right with the information I provide, then you can do it as well. 1, 2, 3. Largest candle has not been broken on the downside. We wait for it to break on the upside. Probably will push away quite a bit here and then come back to this level. That's when you enter. Risk level, stop loss is here. And whatever the break is here, wait for that level to be broken again. Then you can move your stop to break even and modify it with swap commissions until you reach. This is a potential target, of course, but also this one, the highest one, which would be an all-time high on gold. That's how you trade the institutional candle the right way. Always confirm it, wait for it to come back, because it will if it's an institutional candle, and trade safe. If you do that, your losses will be very, very small and your gains will be massive. So working that way, you work as a professional gold trader. Good luck and talk to you soon again. Bye for now.